Welcome to tonight's remote user group webinar. And there's our disclaimer. Please remember there's no advice tonight. It's all perhaps opinion, but also general and educational information for education only. We're not recommending anyone take any advice. First, I'll show the minutes of the August meeting. Just as a reminder of what we did last month, for those who didn't see that. Here is what we did last month. Phil H talked to us about the ROC indicator and how he uses ROC, rate of change. And in the tips, BullCharts tips portion of the meeting, we talked about colours in BullCharts and available colours, and there's a link there in the minutes to the a article in the knowledge base, the BullCharts knowledge base. We had a brief chat about the BullCharts user forum. We asked about internal formula and variables. There was a question about that we couldn't really give a really good answer for, unfortunately. Someone asked about how to put a date onto the price chart. When I prepared these notes, I found some BullCharts script that is an example of how to do it, so I put that into that session. We talked about how to do a screen capture. We also talked about the latest BullCharts version, which reminds me actually, and for anyone who was listening just before 8:30, I was asking what version everyone's using and hoping that everyone is already using version 5 of BullCharts, version 5 or newer, version 5.1.4 at least. Some people might be using 5.1.8 or any number up to 5.1.12. Now, don't rush out to get the latest one. If what you're running currently is version 5.1.4 or better, stay with it for the time being. Other versions since then are considered beta versions and not yet ready for broader implementation. So just be a little bit careful about that. But they do address little issues, and the last couple of changes have been addressing US data and the accuracy of the US data, especially with stock splits. And that's something that some of you are following and like to do. And I think that feature in BullCharts has now got to a point where if you are interested in the price, the actual pricing and volume of stocks in the US, there is now a US database that you can download and have updated throughout the daily basis. There's something like 9,000 or 10,000 securities listed in that database. Most of them are stocks, but a number of them are indexes as well. So that's now becoming a lot more accurate. Brendan has managed to find some ways to do that. That's all out of the minutes of last month's meeting. Let's have a quick look at the agenda for tonight. Here it is here. Sadly, we didn't have a Melbourne meeting last week as we would have hoped to have done. We had been meeting every month without a break since 2006. So theoretically, we would have now been up to meeting number 170. Never mind, we've got this session tonight, and David Woodside is going to show us how he uses BullCharts. In the past, he's shown us some months ago how he uses the Donchian channel indicator. Tonight, David's going to show us a bit more detail about other aspects of the charts that he uses.
All right, so yeah, I offered to Robert to just go through my technical charting, what appeals to me, and I just thought it might be useful to for other people to see how I set it up. And by no means am I an expert. I'm not, but this is what works for me, and so I'm happy to share it with you. And probably, hopefully, out of this, we might get other people that might be interested in showing how they use their charts. I'm always interested in seeing how other people do. As you can see from the picture, I'm a bit of a keen photographer, and that's a picture of one of two Spitfires that still in Australia. It's a Mark 8. to tomorrow's show in 2015. So we move on to the next slide. So what this is about this evening is how I've modified my chart templates over time. I suppose it's a bit like coming to maturity. I've looked at some of my earlier charts and I was pretty aghast at them actually. I'm going to show you what my current chart layout is, what indicators I use, what scans I use, and what I'm looking for on the charts. So, first of all, this is a warning. This presentation contains no advice. I'm not licensed to give any financial advice. It does not include any advice or recommendations. These are my thoughts and for your general awareness and education. There are no recommendations to take any action or to invest any money in any way. Please always consult a licensed advisor before making an investment decision. So that's my disclaimer. I could probably pad it out further, but I think you've got the gist of it. Hopefully you take it in the tone that it's delivered. In other words, what I do. So a little bit about me. I'm a retired farmer. I've been fortunate travelling both local and overseas. Haven't done much in the last 6 to 9 months, of course. I am a keen photographer and I invest in stocks using technical analysis. And this is a picture I took of the canning stock route back in Western Australia in about 2015. So the next slide. I started using or got interested in investing once I retired from farming in 2000. Well, I started before I retired, but I started with a broker. Then I became online, and I've always been keen on graphs because they show lots of information. I went to Melbourne and did a share trading course in 2005, and I purchased some software which really didn't appeal to me. It was actually, I think it's still around and it's still used, called Profit Source. But it wasn't mine. But then I found BullCharts in 2006, and that was probably more suited to what appealed to me. So I plugged away at it, and over the next few years, and if anyone, I'm sure many of you can remember, from 2003 to 2007 was a marvellous time on the stock market. You could make poor decisions and still make money. So I actually made some pretty poor decisions, but I still made money. And I've got to tell you, when the market crashed in 2008, I gave a bit of it back, but I kept probably 2/3 of it. So that was my sort of foray into charting. This is a picture I took of an Emirates A380 Airbus in Sydney Airport in 2017. Just a few little share market gems. I'm sure this is one that Robert uses. The best time to prepare for the next bull market is before the bulls have bolted. And we've all heard of up the stairs and down by the elevators. I like this one today. Today's darling could be tomorrow's dog. And I think this one is very pertinent. There are no certainties in the share market, only probabilities, and that's what we're really looking at. And the trend is your friend until it ends. And I like the cartoon that says, yes, our investments are diversified, 20% out the window, 65% down the drain, and 15% gone with the wind. So he's telling his wife that things aren't as good as they could be. So my charting history: smooth seas do not make a skillful sailor is an African proverb, and it's very true. Or how I got into technical charting. And as I said before, I'm a data-driven person. I like graphical displays of data, and I like colour for visual effect. And this presentation are the things that I like about BullCharts. As most people know, most stockbrokers use both technical and fundamental analysis. Truly, I'm not very much into fundamental analysis, although I do look and see if companies have large debts or anything like that. I generally can't get excited by them. And I also look for a minimum capital requirement. But my investing, I guess, has evolved into trend trading over a period. And I've liked the presentations that we've had in the last 6 to 12 months by Des, John and Phil, and they've given some insight into how they use BullCharts. And as I said at the beginning, I hope this talk will encourage other members to come forward and share their thoughts and ideas about using BullCharts. Another cartoon that I quite like, this is by Scott Adam. The lesson in investing is you should buy a stock whenever the chart looks like a squirrel sitting on a clown's shoulder, and it's called technical analysis. And I think it's very pertinent. Well, probably not, but anyway, it's a good joke. So as we all know, there's a large range of chart types: line charts, bar charts, candlestick charts, Renko charts, Heikin-Ashi, point and figure, Ichimoku. And all these charts have positives and negatives, but my preferred option are the candlestick charts. And the reason is I think they're visually more appealing. To me, they convey more information, but they do need more space than the open, high, low, closed bars. Line charts, smooth price volatility, and they're often quite good for illustrating trend. And as we all know, bull charts offers a large range of options in that area. You can put many indicators on your chart. You can plaster the whole look like it looks like a bowl of spaghetti. And I started doing that sort of stuff, but I learned over time that that's not really what I wanted. It became difficult to make a decision. You know, we had so many alternatives, so I sort of, I suppose, honed it down to a few over the years. And as I said before, I like colour for recognition, and I like bull charts for their ribbons, I think, and I use them quite extensively. I prefer my candle to be coloured rather than black and white. I've tried both, but in the end I prefer colour. And as I said before, I've simplified my charts over time. Some of my early charts were rainbow-like, as I call it, almost psychedelic. The later charts I tried to be more simple. I tried to be cut things out that are really quite extraneous. I got fewer ribbons, fewer indicators, less distraction. So let's have a look at some of my early templates. Now, to demonstrate this, I've selected one stock. It's called Ramelius Resources. It's a mid-tier gold miner in Western Australia. It's got a market, it's in the XKO. I think actually it might be in the XJO as well. It's a $1.6 billion company. It's got low debt, and it has about 3,000 trades a day. So it's quite well traded. And I've used this as my various chart layouts. All the charts that I'm going to show you in the next few slides are all weekly. They show about 3.5 years data, and they're till the end of August 20. They're probably missing about 3 weeks data. I did this about 2 or 3 weeks ago, so I haven't got the latest data, but I don't think it matters. All I want to do is show you the different sort of charts. I do also use daily charts for confirmation and when I'm sourcing a stock. So, as we all know, when we first get bull charts, this is what we get. We get a basic black and white candlestick chart and volume, and from there you can do all the things that you want. So this is what I call my first one, my Technicolor chart, and it's sort of fairly psychedelic. I started off with an EMA 1334 with fill, and candles that were both green and red. Some of these indicators, I'm not sure what they were, but I also, Gary Stone from Share Wealth, I think it is, he was very keen on Ciroc, and I'd sort of read some of his material, but I couldn't make it work. I played around and actually designed an indicator that was based on his Ciroc, but it didn't really work for me. So, but I played around with it in the early years. Don't use it now. And so the next one I went to was Alan Holmes had a moving average 20. It's sort of fairly complicated. Once again, you can go into bull charts and find it. It didn't appeal to me. Down the bottom here, these are all reversal signals. Once again, too much overlap. And down the bottom here, I've got a Ciroc, a Ciroc buy and sell ribbon, and going back to that chart. Go back to that chart. Go back to the chart. Also got down here the Ciroc as an oscillator. So going back to that chart. This one's a bit more psychedelic. It's an 830 EMA fill with guppy multiple or half guppy multi moving averages. I've got a moving average crossover up the top of I went from red green to cyan yellow. I thought it sort of gave me a bit more contrast. And down here I've got 830 EMA with fill, and up here I've got guppy multiple moving averages from 30 to 50. Now I started to, this is a ribbon I use quite extensively, and even today I use it. It's a crossover ribbon, 830 EMA, but I also stuck in below it a guppy multiple moving average ribbon, which corresponds pretty much the same. And also played around with stochastics, and I took them out. They're not the standard. I took them out to long, and they actually almost mirror the MACD. And in the end, I said, well, I might as well use an MACD. It's a more popular indicator and probably shows more anyways. And down the bottom here, I've also superimposed on this bottom pane a 1530 EMA. And of course, down the bottom here, I have volume and a 200 period moving average on volume. So, and you can see in this region here that there was quite a bit of activity. And this is the EMA. Sorry, this was when the prices started to move up from here and took up here. From that, they've actually gone down, gone up, and then taken a big fall today because some of you may be aware that gold is under $1,900 an ounce on US at the moment and showing signs of moving further south. So the next one is now somehow I came across a ribbon that does the XAO 850 EMA, and I sort of said to myself, well, if it's in the red, I'm not going to be buying. But in the end, I found I didn't use it, so I've taken it off in later charts. But I do have it available. This is the EMA, which I use quite regularly, and this is a World Wilders volatility stop, ATR3. It's based on an average true range, and down here we've got the guppy multiple moving averages 30 to 60. This is once again I've got I played around with this. I've got 534 ribbon, and also down below here I've got there's 712 EMA, and down the bottom here I've got an awesome indicator. Don't know what it meant. I found it somewhere on the internet, but in the end it didn't appeal to me, and it's gone in the just been left on the shelf, so to speak. But I had to play around with it. And then down the bottom here I also had a 1530 EMA crossover. But it's all a bit too much to me. So the next one is the line charts, a basic line charts, and I still actually use these from time to time. This is what I use, a 130 EMA with fill. Once again, the Wells Wilder volatility stop, ATR3, and the guppy multiple moving average 30 to 50. And down the bottom here, I've got I played around with 926 EMA, trying to mirror what the MAC did. But I've now moved that to a 1226, which much more mirrors what the standard MACD does. And this is the standard MACD 1226.9 with fill and histogram. And I found over time that I like I don't like the histogram. It just confuses me, and in the end I've dropped it off in later charts. Now this one is getting a bit more psychedelic. It's a candlestick with a 830 EMA and a 3050 EMA, and it's sort of becoming two fills. Now this is one I found on the BullCharts forum. This is a 52-week high. I think Maximillo, I think's his name. He often does. People ask about this thing, and I quite like this indicator because it shows you where the 52-week high is. And you can just put it up here. There's other things that you can, as part of that, but I'm just interested in the 52-week high. So, in other words, if it gets to here, it's a new 52-week high, and that's fairly positive in my book. Here's the crossover 830 EMA with fill, and the 3050 with fill. And I've also added 100 and 200 EMA. Once again, my 830 EMA ribbon, and as you can see that I basically use that ribbon to highlight what I call light and dark. I like to think of a stock being in the dark around this area and coming into light and then moving up until it goes back into darkness again as they move. This one is an RSI. Somewhere I picked it up on the internet. It just simply colours the panes in the middle with a green, which in my view is if the RSI is sort of wandering around 50 or above and it's in green, it's quite positive. If it starts to drop below the 50, then be careful. The next chart, it's getting a bit more psychedelic, is the candlestick chart with the 830 EMA, a 30 to 50 EMA, and a 50 to 80 EMA. And once again, I've got the 52-week high up here. This is the 830 EMA. This is the 3050, and the 5080 was filled. And on top of that, I've got 100 and 200 EMA. And the crossover EMA is, once again, my ribbon, 830. And down the bottom here, I've got volume, moving average volume, 200, and also overlaid with on balance volume. And I use one of these panes quite regularly even now. Once again, to me, a bit of overkill, a bit too much on the chart. And anyway, I've got away from it. Now, the next one is pretty standard candlesticks with guppy multiple averages, 10 lines. The blue from 3 to 15 and the red from 30 to 60. So here we have the 3 to 15 here. Then we have the 30 to 60. And I dropped out the 100 and just put in a 200 EMA. And once again, the EMA ribbon. And this one that I quite like is just simply the EMA as an oscillator, and it just simply shows me that, you know, down here you can see that prices are moving quite strongly. Here it's starting to move away, and caution's required. Same chart as the previous one, but what I've simply done is fill this area in between the blue and the red. So here we have once again the 315, 3 to 15, the 30 to 60 guppy multiple moving averages, and I simply filled it in from 15 to 30. What I was trying to show was, you know, this area here, well, we know it's in a downtrend, but if I could sort of see the distance between here and here, that was a positive to me. This is the 200 period moving average once again the 830 ribbon. And this case, I'm using the guppy multiple oscillator with fill. I don't use it today, but I've played around with it. Now, Bollinger Bands. Now, this is an upper band of 2 standard deviations. The midline is a 20 simple moving average, and the lower bands are 1 standard deviation. I've tried Bollinger Bands, but they just don't work for me. I know a lot of people use them, and that's fine. But for me, anyway, they just don't suit my purpose. Once again, I've got the 830 EMA ribbon, and once down here, I've got volume and moving average volume. I like putting in a moving average volume because it tells me here there's quite a bit of activity, and it means people are starting to buy. Also put in the 830 EMA as a up here on the volume chart. The Donchian channels, which I talked about previously, this is the standard. I have played around from 20 to 60 EMA. At the moment, I'm back to 20. This is the upper band. This is the midline. Once again, the simple moving average. And down the bottom here, we've got the lower band. Once again, we've got the 830 EMA ribbon, and here down the bottom is the standard 1226-9 MACD with no fill, no histogram. So in other words, I've just got the oscillator, and that appeals to me much more. I like to see if the MACD is above the 0 line. To me, it's all positive. Once it starts to head down towards the 0 line, be cautious. Below the 0 line, you want to be extremely cautious. Now, I also picked up on the BullCharts forum, Linda Raschke. She's got a summer trend organiser, and I played around with this. I don't use it now, but I'm just simply put it in here for illustration. This is her, what she calls her uptrend channels, and so when it's in an uptrend, it colours the candles light blue. Black's caution, red's dangerous. So this, once again, the 52-week high. She also got an uptrend indicator at 2.5 average true range. And once again, I've got 8, 30, 50, 100 and 200 EMA. Once again, I use the crossover ribbon 830. And down the bottom here, I quite like this. This is a World Wilder's directional movement as a histogram. And the reason I like it as a histogram is because if it's green like this, it means it's positive. If it's red like this, it means you shouldn't even be considering it. And it's simply plotting D plus, direction plus, direction minus, as a histogram rather than lines. And I also put on that the ADX, which is tracks between the two of them. So that appeals to me from a colour point of view and everything else. Leon Wilson also has a directional movement candle indicator, which I try to put on here, put on as light green, and you can see that it corresponds with that green, corresponds with that green there. Here it's a warning sign. Once again, another warning sign here, another warning sign here, and this shows to me that the trend's starting to lose intensity and caution's required. So once again, I've got the 52-week high, Wilson directional candle indicator. Once again, a Wells Wilder 2.8 ATR stop. I play around between 2.5 and 3. We've got the 80, 8, 30, 50, 100 and 200 EMA. And we've got the crossover EMA ribbon standard of 830. And as I said before, the Wells Wilder directional movement as a histogram. So this is the same one, except I've changed the colour of the candles. This is just simply to demonstrate you can have any sort of coloured candle. I just had to play around with this one to be truthful. 830 EMA again. The colour candles are directional, D plus and D minus. But I didn't have it down the bottom because what I wanted to show you, this is a 926 ribbon. Corresponds pretty closely to the Guppy multiple moving averages, not much variation. I played around with trades and value traded. In the end, I decided it really didn't work and I dropped it out. But that's all I really put this slide in for, is just so that once again you can show these are the number of trades and this is the value traded. And they pretty well correspond. I'd rather look at volume. I had to play around with it. Now this is really getting to probably these are the last two charts, and this is a candlestick with 830 EMA fill. Once again, I've got the 52-week high. I've got an 830 EMA, which I've talked about, and I've got 50, 100 and 200 EMA, and a crossover ribbon 830. And the Wells Wilder directional movement is a histogram, D plus, D minus, and ADX. Now this is probably the last chart and this chart are the two I now use. I've lightened this up a bit more. It's not quite as yellow. It looks a bit yellow to me, and I'd almost just make it white. So once again, when we have a 52-week high, an 8 EMA close, 30 EMA close, 50 EMA close, 100, 200. With this 8 and 30, I basically just have there's a fill category in there, and I can simply fill it in if I want to. Sometimes I do, sometimes I don't. Once again, my 830 EMA ribbon and my MACD standard plus fill and no histogram. So once again, as I said before, if it's above the zero line, that's positive. If it start to turn over here, be cautious. So In my current charts, the upper pane price, I use weekly charts, but as I said, I use daily for additional information. My candlesticks are red-green, and I use price change since open. I have the 52 period high marker, 830, 50, 100 and 200 EMA, 830 ribbon coloured, and I sometimes use a 1226 EMA ribbon. They're very close together. If you have a look at them, there's not a great deal of variation. It fits the MACs better. And I also use the price volume market that some of you will have noticed. It's in your indicators. It's put in by Alan Hull, and it measures price and volume increase. And this is what it looks like. It's a little aeroplane. So if you have a candle with a big increase in price and volume, it puts a little signal up there and says, alert, something's happening. And if you often go and have a look at volume, you can pick it up. Once again, I got my 52-week high. So in my lower chain chart pane, I've got some stacked indicators. The ones that I use are the volume indicator with 200 moving average, which I showed you before, the 830 EMA crossover, the RSI 20 period. Sometimes I'm tending to go back to the 14. I think it's a bit more, it reacts a bit quicker. I use the standard MACD 1226 plus the signal line, and then no histogram. I use the directional movement, D plus D minus, displayed as a histogram overlaid with the ADX line. I use volume coloured bars with the 200 moving average volume overlaid on a on-balance volume, and a moving average oscillator, which I showed earlier, and I'll show you again now. So I've just put when I have a chart, I only have one of these panes up, but this is a bit closer look at the Wells Wilder directional movements as a histogram. This, as we said before, is the D plus, the green's D plus, the red is D minus, and this is the line between the two. So if I can see green, that's a very positive to me. This is the pane I use for volume. It's got straight volume with 200 period moving average, and also I stick in an EMA as a bit of confirmation. And on the bottom here, we've got the RSI 20 period with colour, and just going back to that one. It's a green, as I say. If it's over 50 and it's in the green, then it's quite positive to me. I don't get terribly worried if the RSI gets over 70 or 65, but I do get cautious if it starts to approach 50, like down here. To me, that's a real warning sign. If it's heading down, time to have a good look at what the position you're in. Right, the MACD. This is, as I say, the standard. If it's above the zero line, then it's all positive. It can show some oscillations, starting to trend down. Once it starts getting towards zero, be careful. When you see it turn down like this needs watching, but at this stage, be careful. But no need to panic. And this is the middle one is simply volume. With coloured bars, green up and red down. I don't know what that means much, but I quite like the on-balance volume because it's an addition of positive and negative volume. And down the bottom here, of course, is the crossover EMA as an oscillator. Once again, visually, I think it appeals to me. Once again, you've got a little red one here, and quite a big positive green one here. So the daily scan for the market is, I do a daily scan of the market to find the flavour of the week. You can often pick up in the first couple of days what is the flavour. A good example today, I scanned the market and the buy now, pay later have fallen out of fashion, but I noticed that they all showed a fairly good rise this week. Lithium and gold are both off, so sort of gives you a feel for what's happening in the market. I do a weekly scan at the end of the week. I look for stocks that are trending up, stocks that are above 80, 30, 50, 100 and 200 EMA. And if you want to look for early trends to get a feel for what's happening, I sometimes remove the 100 and 200 EMA criteria. For the scan criteria, it's at the end of the presentation, and if time permits, we'll have a look. I scan the entire market. My criteria is a market cap of 50 million. Trades are 400 trades or more per week. I always have the view that today's lower cap stocks may be the next XJO, and a good example, of course, is the buy now, pay later ones like Afterpay, which came out of left field and stormed. And I still don't think it's in the XJO. Maybe it's certainly probably in the XKO, but it's and it's certainly in the XAO, but I don't think it's in the top 200 yet. And yet it's up now, and it's $80 or $90. I scan for stocks just simply in the 830 EMA, what I call the sunlight. I also scan for stocks daily to see if the breakout markers occurred in the last 10 days. And I do a weekly scan of volume, of increasing volumes over the last 3 weeks. In other words, I'm looking for stocks that have been fairly well beaten down, but they're starting to show some sign. So in summary, my weekly charts, I looked for stocks above the 830.50 EMA, the 830 EMA ribbon positive, paint coloured yellow, I call that white now. I tend to sort of, white's a bit easy colour for me, and the MACD is above 0. For exits, I generally exit on a daily. I watch it on a daily. If the prices are below 830.50, and also if the 830 EMA ribbon's gone to grey, means time to sell, or the MACD is below 0. It sounds simple. It's not, because you make mistakes. But at the end of the day, I'm still in front. Now, this is a bit of an example of Jumbo International, GIN, and I owned it in part of the way. I didn't own all of it. But as you can see, this is the buy period here. It's in light colour, 830 EMA. Price is trending up. Had a little bit of a pullback here. This is once again a weekly chart, and the MACD. But round here, and I was out of it. I got out of it here, but I didn't participate in this last bit. But if I'd been in it, I would have picked this up on the daily chart, because it had a fairly precipitous drop, and from there it was all in darkness, as I call it. And price well below the 8-period moving average, and the 30 and the 50, and the MACD below 0. So once again a stock, but it is starting to move. Started to move the other day, and then it had a pullback to yesterday, I think it was. It's a stock on my watch list.
David?
Yes?
David, can you go
Got
back?
a few questions?
Oh, we certainly do. Can you go back one slide?
Go back one slide, yeah.
So,
Is this one or the previous
that
one?
That one. I was hoping you'd take a breath a lot earlier. I think you've managed to cover a lot of material so far there.
Right.
And
I've got fast, is it?
I've got a few questions myself, but
right.
And there's a few in the chat box. But before we do, I'm aware that some of the people tonight participating in this session, listening intently, might have had their eyes glazed over already with your references to, for example, on this chart, the 830 EMA. Yeah. So for those people who might be a little bit puzzled or a lot puzzled about that terminology, on this chart, can you explain to us what the 8/30 EMA means in terms of the two moving averages, and which curves they are on the price chart, and then the ribbon? And if you can explain all that, I think that might make a lot of sense to a few people.
Righto. Well, on this chart here, I'll do my best. This is the 8-period moving average. And this is the 30-period moving average. And this ribbon is simply based on a crossover ribbon. Crossover, you can either have it as an indicator on your chart, or you can have it as a ribbon. And I find ribbons very good, because the way I like to use the ribbons is you can actually colour the whole chart. So this ribbon here is simply mirroring the cross. You can see where it crosses over here to the minus 830. This is the ribbon that crosses over between 8 and 30. Obviously, on a daily chart, it would have happened early. It would have probably happened around back in November 2019. I can't remember exactly, but so basically this ribbon is just mirroring these two EMA crossovers. So you can, unfortunately, you can't see back to the left side of this chart, but it's been in a buy order from under $5 all the way up, right up here to about $25. Even when it had a dip back here in August 2019, it was still above the 830 EMA, and whilst it got very close to the 30 EMA, it didn't, and it continued onwards and upwards to its final destination. So that's basically how that ribbon works. It is really just a copy of these two moving averages on the chart. It's exactly the same. The only thing I like about this is that you can use this ribbon to colour these panes. And if you go to the ribbon, and I'm happy to show that later, you can highlight these panes and colour this in. And as I say, oh, sorry, what have I done there? Sorry about that. So yeah, and once again, once this ribbon says it's gone grey, it's in what I call darkness, and it's time to be out of it. As I say, I monitor all these stocks on a daily range. I look at the weekly chart, but when the stocks are starting to become what I call overheated, then I'm looking at the daily chart. It's exactly the same chart, using the same indicators, and the 830 ribbon would have probably triggered at about, I would suspect, around here. I don't know. So do you think covers it, Robert?
Yes, David, thank you. It does. Someone asked, in a number of the charts you've shown us tonight, you've used a fill shading, F-I-L-L, not P-H-I-L, a fill shading between some of the moving averages. Can you show us one of those again? And while you pull it up, just go back a few slides. The question is, how does that contribute to your understanding or interpretation of the chart?
I'm just going back. This is the one I probably use most, Robert, this one and the next one. To me, if I see blue in here, that means blue sky going up. If it's yellow, obviously it's in dangerous territory. To me, it's a visual effect. I use this in the next chart of the two. So if the prices come down into here into the blue, that's fine. I get pretty edgy when it drops down below here, and I did bail out here, and once again, once it's into the yellow, you don't want to be in it. But once I start to see sunlight and I see blue, it means go. It means that it's on the watch list. Doesn't mean you buy it, but it certainly means that. And the other confirmation to me is this 52-week high. It says, right, it's come out of what I call darkness. We've got blue here. We've got a candle that's a 52-week high. To me, it's a buy. All right, it has a bit of a pullback here, up again, and then I got out about here somewhere. So with gold stocks, I'm interested in gold stocks, but they're very volatile. And the thing I watch the gold price as well, and once the gold starts to turn over or flatten off, I get a little edgy, because I think it's gold is, as I say, shows quite a bit of volatility. So all right. So
yep, good. Thanks, David. Quick, while you're on that slide, while you're showing us that one, tonight. Earlier on, you mentioned a couple of different moving average crossovers. On that slide, you're showing the 830.
That's what I pretty well standardised on, Robert.
That was my question.
The reason I showed different ones was because I played around with different ones.
Yes.
But in the end, I sort of settled on that's what suits me as an 830.
Yes.
I do sometimes use a 926 only because it fits in with the MACD. Other than that,
all right.
and
So that answers my question. So you,
right.
after all of the experimentation and trying different combinations, you've found that the combination of 8 and 30 EMA, the exponential, works out best for what you're doing on weekly charts.
Yeah,
Okay.
absolutely. That's what suits me.
Good.
Yeah.
Okay. Now you just mentioned MACD. Can you go to one of the slides that shows MACD, because we've got a question about MACD.
Right. Yeah, this one's an MACD on a Donchian channel, but it's so once again, this is the MACD without the histogram, as I say, and it corresponds pretty close to the 830 EMA. I found that a 1226 actually just corresponds a little better, but it's only marginal. I mean, in a weekly chart, it doesn't make a great deal of difference. So my view is that this is an oscillator, and if, as I say, if it's above 30, then you're in blue sky, and it corresponds pretty much with this 830 EMA. And once again, this only just dipped below and then it pulled back up. But you can put up other stocks, and this MACD will be well below the zero line, and you don't want to be in them.
But exactly what is it that the MACD is telling us? Let's have a look here. Remember that the MACD line is the difference between the two moving averages up here, and at this peak it's around about $2.55. No, $2.50. Up here we can see that with the measure tool I've measured it at roughly about $2.51. So the height of the MACD line tells us the difference between the two moving averages. When the MACD line is rising above its zero line, as it is here, it's telling us that these two moving averages are also rising and moving further apart. The distance between them is increasing. That's the opposite of earlier in this chart, where the MACD line is below its zero line, so its value is negative, but it's still rising. So MACD negative and rising is telling us that the two moving averages up here are getting closer together, but they're falling. And you can see that when the two moving averages cross, the MACD line crosses above its zero. It goes from negative to positive. So the MACD line is telling us a lot about what those two moving averages are actually doing. Something else about MACD, if I scroll back this chart a bit and have a look back here to where the MACD line and the 9-period moving average of it, its signal line cross here, notice that's well below MACD 0. A lot of traders take that as a potential buy signal. But in reality, what it's telling us is that the two moving averages have just about finished their fall, their descent, and with MACD crossing above, it means that MACD is moving faster and faster, so the two moving averages are getting closer and closer together. Prior to that, you can see in this chart, the two moving averages were diverging, moving apart. But around here, where the above signal is, the two moving averages have started getting closer together, indicating that the previous downtrend is drawing to a close. So the MACD has actually turned up and started rising above its own signal line. It is considered rather bullish when the MACD line, the red line, crosses above its signal line when they are both below zero. That's considered a bullish signal. There's a little bit more about the MACD. I hope that helps. But Phil has asked, or said he's a day trader, but very interested in trading weekly. And of course, to put this in context, I know that some of the people participating tonight and many of our colleagues out in our broader network have more than one strategy. And they might have one strategy that uses weekly charts for a longer term holdings, maybe for an SMSF fund or something. and a second strategy that is shorter term trading, looking at mostly daily charts. So I'm mindful that people might consider both aspects, but Phil has asked, when you make critical entry and exit decisions, are you looking at weekly charts or daily? And at what point during the week might you consider an exit? If you're looking for an exit position, have you got a stop loss or a trigger, some sort of exit strategy that says, okay, midweek, when this happens, I'll consider getting out, or do you wait till week's end? Or how does all that work for you?
Right. Well, what I've got, you're right, I do have two strategies. I have a self-managed super fund, which is a long term, and I buy on a weekly basis and monitor them, but I also do some short-term trading. Often I'll do a scan I did a scan tonight, and I've got 2 or 3 possibilities that I think tomorrow I will have a look at. One that I've certainly been Worley Parsons is I know and Elders are starting to move up. Now I'll probably watch them tomorrow, and if they show a start to move up tomorrow, I'll probably wait till after lunch, and I don't. I'm not keen on buying at the start of the day. I want to see what happens as the day progresses. I will sometimes sell in the early part of the day, because I think sometimes they're if I think a share's had a fair run and I've made a reasonable profit on, I'll sometimes sell in the early part of the day. But I really don't like buying until after lunch, if possible, because by then I've got a fair understanding where the market is, and they all do say that it's a professional to close the market, the amateurs open it, and I suspect to some degree that is right. You certainly don't get much indication in the first hour, but generally by lunchtime you've got a bit of an idea. So there are a few stocks that are this last couple of months has been fairly good for trading what I call some short-term stocks, day trading stocks. There's been some quite the buy now pay later have been quite good to me, and as I say, I noticed they're starting to move again today, and I will have a look at them tomorrow and see maybe there's a position to take for 2 or 3 days. If I'm uncertain at the end of the week, I will exit the stock. I simply just don't know what the American market's going to do. There's no question that the Nasdaq is way overvalued. But having said that, tech stocks are the flavour of the month, and you can't ignore it. So some stocks are showing what I call FOMO, fear of missing out. But yeah, so yeah, I do a bit of short-term trading as well, particularly over the last 2 or 3 months. It's been quite profitable for me, and but gold, for example, I'll show you a bit later. I downloaded the latest gold price, and it's taken a bit of a tumble. And I've been saying all along that gold's got a pullback that's coming. After that, I'm quite bullish about it. So yeah, so I'm always interested in things. So we're talking about questions. So we'll just go past this, and I just want to show you. This is the 8:30 EMA uptrending weekly. So first thing I want to do is I want to see the sector. I always want to know what stock is. Is it materials or information? My market cap is greater than 50 million. Trades are greater than 400. I show the close. I show the close of 5 bars ago. And I simply scan for the ribbon being positive. I look for the close greater than 30 bar moving average, the 30 being greater than the 50 being greater than the 100 being greater than the 200. I look for the directional movement being greater than the directional minus, D plus being greater than D minus, and also for the directional movement being greater than 20. And I put a close of 10 cents, but probably you'd be struggling to get any stocks under 10 cents that are a capital of 50 million. And so the other, this is the weekly one that I scanned for higher volumes over the last 3 weeks. Once again, a market cap of greater than 50 million, trades greater than 400. I show the price change over 3 bars. I show the close over 3 bars, close, the volume over 5 bars, and the volume over 3 bars, and the volume. So I'm showing volume 1, 3, and 5. I look for the volume that's greater than or equal to the 50-bar exponential moving average plus 50%. I look for the volume being greater than the volume of 5 bars ago, and I look for the close that's greater than the close. In other words, it is showing some movements up. Once again, D plus being greater than D minus. And this time I just simply show the 8X, because if it's in the early stages, I don't really want to cull it out. We might go on my watch list, but the 8X may not be over 20. And I look for a close greater than 2 cents, but generally they're 50 cents or $1.
This is not a question so much as a key point for those who are listening and who are still learning about scans and what you can and can't do with a scan, and to point out that this list of 15 questions, statements, criteria that David's got here, each one of those is essentially one scan criteria listed in his scan. So if you're wondering what you can and can't put in a scan, each of these lines is possible. So for instance, in a scan, you can put in a statement that says show sector. And you don't need to know any programming to do any of these. It's all available from drop downs. And for anyone who's not sure how to do that, we can demonstrate that as well. But for instance, you can show the sector. You can do a test to see if the market cap is greater than 50 million shares. You can do a test to see that the number of trades is greater than 400. Now this is a weekly scan, so it's 400 trades in a week. And these next few start off with show. So what you can do is you can specify something that you want to look for in bull charts, and then instead of comparing it to something, you can say show this value, show this, and show volume of 5 bars ago. Not show the latest volume or the previous, but go back 5 bars. And so on down that list there. Directional movement, plus DI and minus DI, are indicators in bull charts. And just about anything with an indicator that you can think of, you can easily put into a scan like this using drop downs. And the very bottom one there is one that stumped me for the first couple of years I was using bull charts, 14 odd years ago. That was in the standard supplied default scans, there's often a criteria that says close greater than 0.10. And it took me ages to work out what that meant, because I never asked anyone and no one told me. And as David pointed out on this slide, that indicates 2 cents. All of these price values in the scans are in dollars. So the close is greater than $0.02, which is 2 cents. So for anyone starting out with bull charts or not yet having it and looking at scans, that's a simple but key thing to pick up. Sorry, David, that's the other thing to point out too there. Lines 8, 9, and 10 are a comparison of 2 moving average values. So in bull charts, what it does is you can compare the value of the 30-bar EMA compared to the 50-bar EMA. You can compare them and see which one's greater. As I said, all of that's available as options. They're drop downs in the selection criteria. So two indicators like that, that's for the latest value for the close. Instead of latest close, you could compare it to previous or calculate it a few bars ago or whatever. So there's all of those sorts of options too. David, feel free to comment on that or press on. Thank you.
Yeah, no, well, I pretty well covered it all. But by doing the 30, 50, 100, and 200, if you got them stacked above each other, it means it's in an uptrend. That's just simply why. I mean, you could have 30 against 60. It doesn't matter. What all this does is simply say that these moving averages are above each other, and therefore they must be uptrending. Some of them may not only just be uptrending, but at the end of the day, by the time you get to 100 being greater than 200, it does show that it's an uptrend. And that's really what all that does, is simply says make sure that I only want to look at stocks that are uptrending. I don't want to look at stocks that are moving sideways or downwards. And yeah, so and I find actually programming or building the scan up, and it's something that you've got to play with. But by saying to the in a scan dialog box, just simply look for moving, like number 6, a moving average ribbon. I call it D after Des. 8:30. I copied his and made it an 8:30, and I simply say 8:30 EMA is true. In other words, it's positive. If it's in the white or yellow, it's positive. If it's in the grey, it's negative. And it simply says the scan box simply says if that's got to be in daylight, as they call it. That's all that's doing. Yeah. But it's, once you get used to it, it's quite powerful, and I find it that's what works for me anyway. Yeah. I also designed another indicator which I'll show you. Indicator, and this simply is crossover 2 expressions. So you can have a high, low, simple, and you can enter in all of the various things. So for example, if I want to put a high, generally I use close, but if you want to put in a high and a low, simple of say 30. I'll just simply demonstrate this. You may not want to do this, but it's simply make base 30, and you say next, and I'm going to put it on price. It's going to superimpose it on it. Now you simply colour that's got fill. You got fill in there, so I just go to fill, take that off, apply, and the fill, probably you want to make it I'll make it a different colour. Go to red or something. Red. This is just simply demonstrated. Apply, and you make it transfer a bit more. I mean, you may not want it, but I found this in my wanderings around the internet, and I designed it as simply as one of my indicators. That's simply the 30-period moving average, the high and the low over the period, and you can see there's a bit more volatility here, and this guy was simply saying you buy above that and sell below it.
David, very good. Thank you.
I don't use it.
David, very good. Thanks. Can you show us Alan Hull's aeroplane indicator?
Righto. Yeah. Righto. This is a price and volume breakout marker, it's called. And if you looked at the builder and edit, it's description flags both price and volume increase. It's put in by Alan Hull, and this is what you can vary this, but that's the breakdown of it all. So in that case, next, and parameters, style. I'll make it really large. I'll make it an arrow. So nothing there. So yeah, here's a breakout, right? Here's a breakout down here. So it's on you. It's in the standard indicators, and that says a break. You can, as I say, Alan Hull does. I find it's a good indicator, and in this case, it was up 10.9%, and if you looked at volume, it probably was up as well. So if you looked at volume, there was probably it's a bit hard to use now, but it certainly was a jump in volume. So yeah, so that's I find it a good little indicator. I often do a scan just to see if these have occurred in the last 10 days.
Very good, David. Thank you. David, yep. Thank you for that. Round of applause for David. Thank you for all the time. So there's 2 things that I want to show that were touched on in that session. One of them is to do with Alan Hull's indicator, the price volume marker, and point out something that some people might not realise about these scans. When you're applying an indicator. So if we're looking for Allen Hull's indicator or any indicator, don't forget when you go to insert indicator, and you can do this either from the menu, insert indicator, or like it says there, control I, insert indicator, control I. And I use the keyboard all the time, just go control I. When you drop this drop down, there are a number of options here that limit or reduce the list of indicators we're looking at. All indicators, favorites, ribbons, custom indicators. So all of your indicators will be listed there under custom, so you don't see all of the standard ones. Or scroll down further to types of candles, chart patterns. Scroll down further to a list of authors. And one of the authors in here is Hull Colin Allen. Once you click on that, then the list of indicators shown in this next box is greatly reduced. It's much easier to find something like the price volume breakout marker. So there's a tip about how to find indicators more quickly. Now, David did point out that if you look in the builder, it does say here that author equals hull.allen and the category equals volume. Because those two parameters are included in the script for that indicator, that means that this is the category here. So if we also go to the volume drop down in category, we'll find the same indicator, price volume breakout marker. So there's a couple of ways to find things, indicators, in that long list, because there's about 270 supplied indicators in the standard list. One more little thing that might be useful is if you're ever looking at this long list of all indicators and you want to go down to the W's, all you've got to do is click once and then tap W on the keyboard and it will jump down to the W's. So there's a quick way to scroll through that list. Now, let's go and have a look at the MACD, and I'll demonstrate something because Dean was asking before about MACD. I'll put MACD on this chart first of all. Actually, it's at the bottom, and I don't want to see volume, so I will stack the indicators one behind the other so that we can't see volume for now. There's MACD. Now, what we're looking at here is Commonwealth Bank as an example. And don't forget, for those of you who don't know or have forgotten what MACD is, there are two lines here. One of the lines is what we call the MACD line, and I like to, when I'm looking at things like this, colour it, maybe red because it moves faster, and the signal line is slower, so I make that a green colour because it's more like a snail, so that it's easy to distinguish the two. Now this red one, the MACD line, is calculated from two moving averages that go on the price chart. Now let me briefly explain that. Many of you might not have seen this done before. I'm going to insert a moving average, and it's going to be the 26 period exponential moving average, and I'm going to make sure that it goes on the price chart, and the 26 period moving average I want to make green. So I'll change this to green now, and I'll make it thicker so that it stands out. That's all I need, so I'll click OK. Now that green line is the 26 period moving average. Let me also add the 12 period, exponential 12, and what I'm going to do is change the style to be red and make it a bit thicker so it's easier to see. Now, if anyone wants to see these steps in more detail later, we're happy to do that again or go through it again. Now, on this price chart up here, you can see a red moving average and a green one. Don't forget, in these versions of bull charts for the last couple of years, that up here in the title bar of this pane, there are color codings that match the indicator. So this red moving average is this moving average here. And if I right click on that bit of the pane there, that bit of text, that description, I can delete that from this chart. I can go into the properties, I can do all sorts of things, and it helps to identify them. But what I want to show you is I can have a look at the value have a look at the difference in price between those two moving averages. Now, at that point, it's about $2.50, $2.51 roughly. Now, the red moving average in the bottom here in MACD, the value there should be exactly that. Let's just turn on crosshair cursor, hover the cursor here, have a look on the right-hand side in the margin, 256.1. That's roughly to 100th or 10ths, getting close to it. What we're saying here is that the MACD itself, the red line, the value of it here above its axis represent this difference between the 26 and the 12 period EMAs. That's where that red line in the MACD comes from. And this green line is a moving average of that line, the red one. So the red one, the difference between two moving averages of price, the green one, a moving average of that. And the usefulness is, let's also add, just to help clarify something else and hopefully not make it more confusing, is add the MACD histogram. And I'll make sure it goes onto the price pane, merging with the price scale. Sorry, wrong pane. I didn't want that, did I? Delete the histogram, right click, delete. We want it on the MACD. Next, on the MACD chart, down the bottom, that's where we want it. So there it is there. And I'll make the lines thicker, the bars, so that they stand out better. Now, the height of those bars indicates the distance between the MACD red line and the green line. So if we scroll back in time and have a look, you can see at some point that the two moving averages on the price crossed, and down here that indicates the red, the MACD line itself, crossing above its zero line. So there are some useful signals that we can take from MACD. And there's a bit more to it than that we can infer, but that's probably enough for now. David, I'd like to thank you again for your effort putting all those slides together. The slides are up in the Google Drive already for anyone who wants to download them and go through them. And a couple of the indicators David's referred to, especially the 8:30 crossover, we'll be able to put up there as well sometime over the next couple of days. I'll email everyone who's registered once that's happened. Dean, how do you get access to Google Drive? For anyone listening, Google Drive, what I do is I grant access to that based on an email address, and I know some people have multiple email addresses. Simply email to me, let me know which email address you'd like to use to have access to Google Drive, and I'll try to respond fairly quickly and give you access and a link so that you can go to the Google Drive and have a browse through the collection of presentations from past presenters, minutes from the previous meetings, indicators that have been shared by a couple of our presenters in recent times. We're building that over time, and I'm still slowly adding more and more material to it from years ago as well that might be useful. So send me an email. Good, Dean. All right. There's no other questions, no burning questions about how do I do this in BullCharts. So let's wrap it up, call it to an end. We'll meet again in 4 weeks' time, 4th Wednesday in October. By then, maybe in Melbourne, we'll have a face-to-face meeting in Oakley the week before, or it might be a month later. We can only wish, can't we? Not sure what our topic will be. Keep an eye out for the email. Anyone who's got something they'd like to share with everyone, like David has tonight, and Phil has done recently and previously, and Des has done, and others, feel free to volunteer. Or otherwise, I might have to show you something that I do, hand out some tips there. All right, that's about it. So let's wrap it up. Call it quits. Thank you all for your interest and participation. And see you all again. Stay safe and well, and watch out for that virus. Thanks, everyone. Good night.